Hi there. Thanks for tuning in. Today we're going to be doing an analysis and valuation of Tegna Inc. So let's just get started and let's dive into who Tegna is. So they have a portfolio of news broadcast stations. So they just own these stations. They're actually partnered with a lot of these big firms like NBC, CBS, ABC, Fox, and then other groups of news. But those are the big four that they tend to partner with. So 64 TV stations all throughout the United States. And if you live in any of these areas, you probably have seen a news station owned by Tegna. You just don't really know it. They're there in the background. So they are very well positioned, according to them, to navigate evolving media ecosystem. So they've basically, uh, even though broadcasting in general has been trending downwards a little bit, I think Tegna is pretty much showing that the ad spending in broadcast TV is pretty steady. Maybe a long-term declining trend, but not by as much as you would think. It's not necessarily a dying industry, like, for example, movie theaters, people could argue are. And at the end of the day, also, with companies and sectors like these that have a long-term decline, it's interesting to see who the winners are because a good money making opportunity can be those companies that can capture the market share of other companies that fail in the process. So if Tegna can scoop up for very cheap other TV stations, for example, or if they can be the last man standing, well, they're capturing the share of the remaining profits. So that's very interesting. They also have high value content such as the NFL, the NBA, the MLB, and the NHL. So they cover a significant percentage of all those sports in the US. So that's very, very interesting. So they definitely have value there, especially because I don't know about you, but I have a hard time finding sports to watch in a legal way, just having streaming services. So people who are super fans probably have this in some way, shape, or form. Now, political advertising, here's the big one for them, which is that since 2024 is an election year, they are going to make a ton of money from the political ad spend, especially the closer an election is, the more money that the candidates spend, the more money that they will make. So their estimate is that $10.7 billion are going to be spent in political ad spend. They generally make a ton of money in all of these battleground states. Five of seven competitive Senate races, three of three competitive governor races, 24 of 44 competitive races within Tegna's footprint. So they're going to make a ton of money from this. You can see here, 2020 and 2022, they made a ton of money from this. And that kind of starts showing the cyclicality of the business. In their best years in terms of revenue are every 2 years when you have either midterm or presidential elections in the US. That's their cash cow. So this is going to be a great year for them, pretty much. They also use money to have some liquidity. So they do have a larger leverage ratio. And this is something to note because they're always going to have debt. They want to use that debt to acquire things, to do things, to stay nimble, basically. Their debt to equity ratio is 136% compared to their peers. It's very, very low. Same with the net leverage ratio, which is around 3. Their liquidity, however, not too bad. Okay, so they have an undrawn revolver, they have cash. So compared to their peers, they're doing good. Compared to other industries, it can look a little different. And that's the one thing to note that you have to compare it to this industry, which is an industry where people carry a lot of debt and where flexibility and liquidity is important. Their balance sheet is actually pretty decent. Now, since we're talking about a lot of debt, we start looking at the fact that, first of all, they've been working down this debt, so they can do it. That's a great thing. And the other thing is that their debt is not due anytime soon necessarily. It starts being due in 26 and 27, but the really big pieces of debt that are due are in 28 and 29. So you don't really have to worry about it. And the double B plus rating and the BA3 rating, not too bad, right? Not great, but not too bad. So thankfully, they seem to be in an okay position in terms of financial health. They also seem to have reduced their shares outstanding significantly. So with what they make, and especially what we hope is that with what they make from all that political money coming in to their ads that they can buy back shares, and you as a shareholder will have even more ownership of everything that Tegna represents. So that's important. And with their with their free cash flow, they're going to have a lot of free cash flow, is what they're saying, based on all this stuff. There's less subscribers and maybe some less advertising trends in the long term. But I mean, they're going to have so many renewals, they're going to have all that political broadcast revenue. So 24 to 25 is going to be a great year for them. We know this. And here they give us their full year guidance. So if you want to make a model, it's important to look at this and to just capture the model based on that. So here's what I'm looking at. I am looking at an estimate of how much revenue they're going to make next year. And that's going to be, or in this current year, really 24. That's calculated to be about 3.12 billion. And then next year, that's going to drop because there's no longer elections, 2.79 billion. Let's just say it's that. Here, you can see this trend a little more clearly, where in 2019 they didn't do as well as 2020, where they did very well. In 2022, they did better than 2021. And in 2024, they're going to do better than in 2023. Now, the average free cash flow, the average amount percentage of revenue that gets turned to free cash flow is about 16%. So that's the number I'm going to roll with based on these revenue forecasts over here that are done by analysts. So with that, we can plug those numbers in to a discounted cash flow model and check out how much Tegna is worth. Now, my required rate of return is 11%. That's 1% more per year than the markets on average. My perpetual growth rate is actually 0%. I don't think Tegna is going to grow in perpetuity, right? I do say 2% perpetual growth rate. Ignore that. It's zero, because at the end of the day, it's still a broadcasting firm. It's not really going to grow. I'm not going to say it's going to decline, because maybe they're going to be able to capture market share of that declining industry. They're going to be able to buy other news stations, and they'll do good then. But it's important to just be a little conservative here. That's why I'm using the lower end of revenue estimates, and why I'm just saying they're not going to grow in perpetuity. Then we're going to divide that by the total number of shares out, and we're going to get a fair value of equity of $25.18. Now, what else is going to happen? Here, the net debt is significant. So we have to subtract that to that total value. And then we get a fair value post debt of $9.18 with net debt included. However, as we were talking about, their debt is not really, it's a thing that's pretty normal for their industry. It's a thing that's not due way later. So you can choose to ignore this number. Just saying their debt position is decent. They're poised to make a lot of money, so they can pay down some of that, or they can create value in some different ways. So you can decide to ignore that net debt uh, subtraction. It's really up to you and to your risk appetite. Compared to where they're at right now, they seem to be at this 14.22 US dollars level. It's between this $25 and $9 number. Honestly, it looks very interesting to me. I mean, it's clearly it clearly was at the value that I had assigned it before, all throughout 2022 and part of 2023. Nowadays, it's much lower. P ratio of about 6, dividend yield of 3.5%. So you're getting paid to wait a little bit for those very nice presidential advertising revenue numbers to come in. But in general, I find this a very interesting stock. And here's the summary. So Tegna is making smart financial decisions in an industry that can prove very challenging. At the end of the day, as I said, they seem to be at least holding ground, even though the long-term secular trends are against them. A lot of their seeming issues, such as debt and dependence on the big four broadcasters, for example, ABC, CBS, etc., is something that can be handled later. Why? Because they've renewed all their contracts with the big four, and because debt is for way later. And Tegna has proven to be able to handle it beforehand, because they've renewed everything, and they have also been working down their debt over time. This year will definitely be a fun one for them in terms of cash flow, and you will get rewarded for it with share buybacks and a dividend. So, with that said, I posit who are the winners of declining markets. Tegna looks like a winner. It looks like an interesting stock to either invest in the long term, or even possibly swing trade. If you see it come down to $12 and then go back up to 20, that's probably a decent swing. I wouldn't shy away from that necessarily if you see something like that, if that fits your appetite for risk taking. It's still not risk less. Maybe they make a lot less money from these presidential ads than people realize, and maybe that sends the stock crashing. It's still possible. But overall, their financial position seems pretty decent, and I wouldn't shy away from an investment in Tegna. Now, I hope this was very, very useful to watch. I had a lot of fun making this video. If you want me to analyze different companies, just comment down below and let me know which you want me to look at. Thank you so much. Don't forget to like and subscribe, and have a great rest of your day.